Good morning. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Saturday, everybody. I hope we are ready to learn, ready to earn, okay? We got some stuff to go over today. Guys, we're going to talk about aliens, and I need to just jump the gun with that, all right, because we have some weird stuff happening in September. I have no idea what's going on. It's obviously fun and exciting talking about, what if aliens? It's important for your investments in case something actually does happen. So I can't believe I'm saying this. But at the end of the day today, or after the news, we're going to talk a little bit about disclosure and aliens and how it might affect your portfolio. And again, I can't believe I'm saying that. But it's pertinent. It's a factor in investments. So get ready for that. All right, we are going to talk about that later today. I am praying to my Lord above that I can keep this under 15 minutes. So bear with me. It is an interesting day today. Let's start with the term, right? The term of the day is the efficient frontier. This is in my side of the world, my neck of the woods, efficient frontier is more of a concept that you sort of design every client portfolio with. It's something that you just have in the back of your head. It frames how you design portfolios fundamentally. Now, it is actually the efficient frontier. It is actually a quantifiable figure, and I'll explain here. But let me read the definition really quickly. So, the efficient frontier is a key concept in modern portfolio theory, a framework for constructing investment portfolios. It represents a set of optimal portfolios that offers the highest possible expected return for a given level of risk, or the lowest possible risk for a given expected return. Okay, so what the heck does that even mean? When we meet with somebody and we say, okay, tell us what scares you at night? Like, how do you feel about Bitcoin? How do you feel? What if I told you should put money in your mattress? Like, where are you at feeling out your risk tolerance, so to speak? This modern portfolio theory, in particular the efficient frontier, is a line. Okay, it's a line, and I'm trying to dumb this down as simply as I can because it took me many moons to even understand this concept. But it's a line that considers a whole bunch of different factors, but on that line is considered efficiency. So if your portfolio, say it's 60% S&P 500 and 40% US Treasuries guaranteed investment, if it fits on that line in the graph, it is considered perfectly efficient. Okay, so anything to the right of that graph and closer to the optimal, to the efficient frontier, the line, helps you make a portfolio for a given set of risk, a client's willingness for risk. Okay, I don't actually ever punch any numbers in for this because there's a couple of factors that I don't like about it. One, risk is never known. Return is never known. Okay, you'll never know either. You only know after the fact. Okay, so it is a hypothetical, but it does provide for a baseline of portfolio design that is really, really cool. So you can effectively try to get, so we'll just use an example. You want to get the S&P 500's return of 10.5%. Well, you also don't want the volatility, the possible 40% drop one year. You don't want that. Everything about the efficient frontier is volatility related, in my opinion. You want to see a steady line. You do not want to see those big dips. It's too emotionally draining on people. So the efficient frontier is this concept that if you're able to mix risky assets with risk-free assets, you can come up with this middle ground where, okay, this is my reward that I'm going to get for the risk that I'm willing to take. And it's a really interesting concept. You can get super, super into it, but that's why it's called modern portfolio theory instead of fact. But yeah, I thought that you guys might like that, the efficient frontier, because it's something you guys can look at home. You guys can just type in, what does an efficient frontier in investing portfolio look like? And you'll be able to come up with your own ideas, and it's very interesting. But most of the time, it has a lot to do with correlation. So you want to invest in things that are non-correlated. Again, this is this is coming. There's so many different moving pieces with this, but when you invest in the S&P 500 to diversify, you need to get into something that is not correlated. That means if the S&P 500 goes up 1%, whatever your other investment does, it does something different. It either goes down, it goes up 0.5%, it goes up 30%. They have to not be correlated to help for the diversification. Anyways, that's the efficient frontier. It's a line on a graph with equations, and if you can get your portfolio on that line, you are considered hyper efficient within that portfolio. Okay, let's read the news. We're already at 5 minutes. I ain't got time to waste here. Okay, major U.S. equities indexes edged higher to wrap up a week that featured a pile of major earnings reports. The S&P 500 advanced 0.4%, notching a record high close for the 5th straight day. Guys, that's killer. The NASDAQ also headed into the weekend at another all-time high, closing up 0.2%. The Dow ended with a daily gain of 0.5%. Shares of Deckers Outdoor, DECK, moved more than 11% higher, scoring the S&P 500's top daily performance. The parent company of UGG, Hoka, and Teva footwear brands topped revenue and earnings per share estimates for its fiscal first quarter, boosted by a nearly 50% year-over-year surge in international sales. Awesome. That's good for them. Newmont, NEM, also reported better than expected quarterly sales and profits, and shares of the gold mining giant jumped 6.9%. Higher gold prices helped underpin the strong performance of the world's largest producer of the yellow metal. Newmont's gold sales were up more than 26% from a year ago, although sales of copper, silver, lead, and zinc moved lower. The company also announced a $3 billion buyback program. VeriSign, VRSN, a provider of domain names and other internet infrastructure services, also boosted its shares repurchase program, authorizing an additional $913 million in buybacks. Although second quarter revenue fell short of consensus forecasts, earnings per share for the period exceeded expectations. VeriSign lifted its full-year forecast, highlighting strong demand for .com and .net addresses. VeriSign stock surged 6.7% to log its first ever close above 300. Okay, I'm going to stop the news there because I want to talk about the aliens. Obviously, that's what we're here for right now. But I do want to just touch on why. Well, okay, so evidence for investing right now, or evidence for why you should be optimistic, and this has to do with the aliens. So we'll get there. I promise. There is more than $7 trillion in money market instruments right now. Okay, we call that the sidelines in the investment world. There's 70 on the sideline right now. There's never been that much in the history of the world. Okay, and what are they waiting for? What is all that money on the cash waiting for? It's waiting for tariffs to be done. It's waiting for the interest rates to drop. It's waiting for earnings reports to come out that show better than expected results, like we've been getting now. Guys, we're in earnings season, and companies are crushing it. How is that possible if all this money's on the sidelines? What is happening? The world, or the rich people, the business owners, not the business owners. Well, yeah, the people who own these businesses are recognizing the value of targeted ad space, the AI, and I don't know what you would call it necessarily, but where the ad space where we think they're listening to us, and then the next day you'll see an ad for exactly what you were talking about. Whatever that's called, I'm pretty sure that's preferential marketing, something like that. The AI space and preferential marketing, they're finding a way to really get into the data and be able to sell people's information. Okay, is that bad? Is that good? It sounds bad, right? But for earnings, that stuff is great. Okay, so even though we have all this trillions and trillions of dollars, the marketing, these companies are finding a way to grow in new ways using this AI infrastructure. Quantum computing is going to be coming up soon. So that stuff is really, really exciting. And it just shows that the second we get tariffs figured out, and I mean this, the second it's like, okay, I'm done, right? Big Man T is done with the tariff talk. We've done everything we said we would do. The market is going to explode. And then, ideally, Powell will lower rates in September. Okay, if he's able to lower rates in September and then in December, that $7 trillion on the sideline is going to flood the market. And that alone is going to shoot it up. Now, obviously, there are some caveats, right? But that's the evidence for why you should be excited. Yep. Those three things alone, in particular, it's interest rates and the cash on the side is what I would tell you. And earnings reports. Earnings reports are killing it. There's an argument that earnings reports alone is what really drives the S&P 500. But we have now these other factors that are going to be boosting it. Okay? The second interest rates drop, money is going to flood the market. It just is. That's the way. That's the nature of the game. With interest rates high, money market funds earn more in the money market funds. So the risk of equities is not worth the reward. Okay? We just talked about the efficient frontier. That changes when interest rates drop. People get excited about equities. Okay, now here's the evidence against it. First is there's argument that people think Powell should raise rates. I don't agree with that. The tariff impact supposedly hasn't been felt yet. Usually takes 6 to 12 months. Arguably, there's really not been a lot of tariffs actually implemented. There's been some, but there's an argue that it's just mostly threats and unpredictability from Trump, which is a major negotiation tactic, by the way. If you don't like the unpredictability of Trump, I would tell you you're just not looking at it the right way. Obviously, we don't want him pressing any red buttons in a suitcase anytime soon, right? A metal suitcase with a bio code that he has to plug in. We don't want him doing any of that. But if he's able to trick and manipulate and just sort of slither his way, I hate to use that word in this context with our president, but if he's able to slither his way into better deals by just not being transparent, there's an argument that that's going to make you more money. So just keep that in mind when you're like, wow, he just doesn't. Was he ever? What do they call it? They call it a taco. They call it the taco. Trump. Man, let me look it up real quick because this is actually a fun little taco tax or taco tax. That's probably not the right word. Trump, not taco Trump. That's got to just be the right way to do it here. What is the acronym for taco? Okay. Trump always chickens out. That is the acronym they're using these days. And thanks for letting me look that up, guys. I know that's probably annoying, but Trump always chickens out. And they're referring to him not really sticking to his guns with the tariffs, which I get it. That's annoying, but that's a massive negotiation tactic that has clearly helped us so far. Okay, so higher rates, tariff impact hasn't really been felt yet. The PE of the S&P 500 is at 26, which arguably is a very high number. The last 5 years, it's averaged 19.5, and the mean for its existence is about 15 or 16. So the average, I mean, you could say it's at a premium right now. But hey, guess what? Stephen Curry shot 28% in January 2022. That was the worst stint of his career. And then he finished the whole year at 38%, right? So he increased his rate by 9%. Okay, it always averages out. In basketball, there's a joke that we have that it averages out, right? If you go 0 for 10 from 3 in one game, you're due for 10 threes somewhere else, okay? So that's how I view PE when it comes to the S&P. It always averages out, okay? And let me give you an example. I promise you we'll get to the aliens here in a second, guys. But look at PEs of some of these companies. I just picked 4 random companies: Amazon, Starbucks, McDonald's. Current PE for Amazon is 37.7. At its highest, it was 935. Okay, Starbucks, currently 34.2. At its highest, 182. McDonald's, current 26.3. At its highest was 35.7, which, I mean, it's food, so that's a little different. But here's a big one that we like, AT&T. That's a utility company. They're currently at 15.9. Very reasonable, right? Excuse me. They were at 256. Okay, this idea that PE is the world's end is just not real. It is a measurement of where a company is currently at, and also it considers sentiment. Okay, sentiment. Palantir is a great example. Boy, does that have a high PE, but money keeps flooding in because they believe in it, and there's fear of missing out. Anyways, that's the Stephen Curry theory that, hey, just because you have a really bad month, it averages out. Okay, his actual average is like 41% for his career. So going from 29 or 28 that he had in January to 38 is way more logical over a larger sample size. Okay, and then this is the other reason we're going to talk about it, guys. It's alien time. You ready? We have disclosure supposedly coming. Now, look, I'll be fully transparent. I do follow some of this stuff. I'm from Arizona. There's been weird stuff in Arizona for the longest time. If you guys remember the Phoenix Lights, that was a really big deal. And I want to know. I want to know what's going on because we got people saying, we got credible pilots, credible government whistleblowers saying, hey, this stuff is real. We have evidence. We'd love to be able to talk about it, but we need to know we're protected. And so finally, they're going over ways to protect these whistleblowers. And in September, supposedly, right, they were supposed to do this, I think, in June. But in September, we're going to get disclosure. And we're going to get real disclosure. Like, hey, here is a ship. Here is an actual biologic that we found. And that's the term that they use, but really it's just alien for lack of explanation. Supposedly that's what's going to happen. And when I was reading about this, I was thinking to myself, how would this affect the market? Like obviously it's like a soft touch, right? I'm sure they're not going to have a live alien come to the congressional meeting and be like, hello, I'm Paul, shout out the movie Paul. If you've ever seen that, great movie. It's just going to be a soft touch. Hey, yes, we do have this stuff. Hey, yes, here's a little bit about what we have. We want to be gentle with the way we release this stuff. It is a big deal, and this is kind of where we're at. I would argue that's going to have massive implication on the market. Now, how massive? It's going to depend upon what is released. Is it real? If none of it's real, then none of it's, like, if it doesn't happen, then it doesn't happen. Okay, but supposedly September, big month. Now you might say, well, why September? Well, the Congress, FOMC, a couple of other governmental entities, they take August off usually. It's just called the August recess. And by off, I mean they usually go to their home states and they work there, right? They go there and they work within the capacity that's not their congressional duties usually, right? It's like a little bit of a recess for them. What do I think is going to happen with the market with this? Well, one, I think defensive stocks, right? Northrop Grumman, Raytheon, Lockheed Martin, some of these companies, they're going to get, I mean, naturally they would have to get boosts. And you would, I mean, there's an argument to be said, you should invest in those companies, right? We have this new, it'll change the philosophy of how we think about humanity. And that's a little terrifying. I think initially markets will drop probably 5%. And that's the 5% I've been looking for, by the way. Okay, that's the 5% I've been looking for. If that happens, then I'm going to try and invest a lot of the cash that we have. Now, I'm not saying I'm going to do it all. Okay, it's still too much confusion. You don't know what's going on. But if there's actually alien disclosure, I would assume retail doesn't do well. I would assume that their earnings will drop. Defense sectors will go up. Utility will probably go up, would be my guess. I bet tech feels a quick drop, like probably a pretty big one, to be honest. But then it'll initially kick right back up because this probably doesn't change our day-to-day life, but it does change a little bit of your perspective on existence. And maybe it doesn't. I don't know. I was just thinking, if this disclosure does happen, how does that affect our clients? Can we try to get ahead of maybe what an opportunity might look like? And so that's why I wanted to bring it up to you guys. In September, we don't have a date yet. I have no idea when that date is. And this could be an opportunity to make money. That's my opinion. It does not mean that it's going to happen. That is supposedly in the investment world, also in the political world, that's supposedly what's going to take place. If that does happen, please remember this. Okay, you guys remember what you're investing in. Defensive stocks might be a great short-term play, and there'll probably be a drop in tech and in the S&P 500, which if that happens, I'm going to be a little bit more aggressive with cash and just, I guess, wait to see what happens. I guess at that point, right? That would be an absolute crazy situation. But also do your own research. Okay, go out there. I'm telling you what I know as a professional investor for other people's money, what I would do if something happens. I already feel a little weird talking about the alien stuff right now. I'm like, oh, maybe I shouldn't have done that. Was that professional? But if this is a chance to make money, I got to talk about it, right? That's something that we want to do. So, guys, that is it. I'm done. Please don't tell people I'm some kooky flat earther. I am not. Okay. I just want you to make money. I want you to make money, and I want to save you from making bad investment choices, because if you can lose less over a period of time, it is just as good as making more over a period of time. Let that wrap around your brain. Let that wrap around your brain and sink in. All right, guys, that is it for me. I'm 6 minutes over. Of course, as always, invest early, invest often. We'll see you next week.